Today, another dose of anti-Spruik. Hello again, it's Martin North from Digital Finance Analytics, where I've noticed posts covering finance and problem news with a distinctively Australian flavour. Well, we've had quite a lot of positive feedback from our earlier shows where we went through some of the discounting that's going on across the country with regard to property prices. And specifically, we had people asking about Queensland, particularly around the Gold Coast and Sunshine Coast, and also northwest Western Australia. So today I'm back with another dose of anti-Spruik, going through some specific property examples thanks to Cookie Boy, and we'll look at the information that's provided in terms of the discounting that's going on, and also set that in the context of my own research through the core market model that we use. Now, this core market model, as you may know, takes information from a lot of sources, including from our surveys, and allows us to have a look at what's going on and what house prices may do, and also what people are thinking about in terms of property. And that allows us to slice and dice the data all different ways across the country and different types of households, and allow us also to think about what the future may be in terms of where prices are going. We run different scenarios. And so we can take our information about mortgage stress, the price trajectory, the buying and selling intentions, the migration, economic data, CPI, things like that, put it into the core market model, run it through the scenarios, and allow us to then form some views about what's going to happen. Now, that information is quite valuable when you set it in context of where prices have actually eased back. And also, by the way, before I get started, if you're interested in a one-to-one conversation about a particular suburb using all my tools, we do that. It's an individual confidential discussion, and while I can't give financial advice, I can discuss the data at a postcode level and look at some of the underlying trends. That allows us to look at stress, home price, trend data, and also the modelling about where prices may be going. Now, you can book a time for a Zoom or a phone discussion up to an hour, and there is a cost involved simply because there is research to be done to be able to have that conversation. And at the moment, I'm booking about 3 to 5 weeks ahead because there are so many people wanting to chat with me about what's going on. So now let's look first of all at the area in Queensland between the Noosa area to the north and down towards the Sunshine Coast at the south. And there's some really interesting areas, and this map just shows you the particular locations that we're going to discuss today. Now, here's one on postcode 4567, actually Noosa Heads. It's a 3-bedroom house, and it was listed 109 days ago on the 22nd of April 2022, and on the 13th of May it was on the market at $1.495 million. Now on the 15th of July it was reduced to $1,350,000, so a considerable fall. And here's another one in the same postcode at Sunshine Beach, again postcode 4567, and that was listed 133 days ago on the 29th of March. It's a 4-bedroom house on a relatively small block. Originally it was listed at the end of March for over $2 million. Now its offers over $1.895 million, and that was on the 17th of May. Now if we look at postcode 4567, this is an extract from my model, and the first observation is that mortgage stress, that's a cash flow measure of how many households with a mortgage are having difficulty meeting those repayments, is at 55.6%. This is quite often a good indicator of why prices might be sliding down. Rental stress isn't too bad. Investor stress is, well, significant but not dramatic. But overall, there's more than 50% of households in financial stress in the postcode. And if you look at the trajectory of prices ahead, again, looking at our scenarios, houses, in the best case scenario, that's assuming everything goes really well. The interest rates don't go as high, the inflation gets under control, the international situation eases back, and my immigration continues to grow, there's still a chance over the next 3 years of prices being up by around 11% cumulative. On the other hand, the base case scenario, which is the one I think is most likely to happen, and that's based on the assumption that inflation will be more stubborn, that interest rates will have to go higher, and that the international situation with regard to China as well as Ukraine will continue to grumble along. would suggest that the base case is a fall of around 12% over 3 years. And the worst case scenario, if things go really bad, is a fall potentially of 30% over 3 years. The scenarios for units are also shown there. And one other interesting observation is from an investment perspective, the gross investment returns in this postcode are around 4.8%. The net investment returns, though, are just 0.9%. This is really important because gross investment returns compare the price of the purchase of the property with the theoretical rent you may be able to get. Net investment returns look at real cash flow on the property, and that, of course, is often lower. And this is very low at the moment, 0.9%. Now we're going to another postcode, this time Marcus Beach, postcode 4573. And this was listed, well, a long time ago. And originally it was on at $2.9 million back on the 15th of March 2022. But now on the 27th of July, it's on for $2.595 million. Now it's a 4-bedroom house, 604 square meters. And if we look at this particular postcode using our model once again, first observation is that the best case scenario is for prices to be up over 17% over 3 years. The base case is a fall of about 7%. The worst case scenario is a fall of 25%. And looking at the stress, well, rental stress and mortgage stress is there, but it's not above the threshold of 40%, which is when it starts to colour up. But nevertheless, there are a high proportion of stressed investors, so these investors in this postcode struggling with the ability to pay. And overall, there are 48% of households in financial stress. And looking at the investment returns, the gross investment returns on average in this particular area are around 4.7%. The net investment returns are just 1%. And this postcode includes Coolum Beach and Mount Coolum and a few other areas too, but includes Marcus Beach. Now we're going to look at this particular postcode, Burley Waters. And of course, this is down below the Gold Coast. And one of the interesting things about this particular postcode is how many people are still claiming that it's a really raving buy. Well, let's look at some of the data and see whether we agree with that or not. Here's an example. This one actually is in Burley Head, so postcode 4220. It's a 3-bedroom townhouse, and it was listed 105 days ago on the 26th of April 2022. On the 27th of May, it was offers over $849,000. Now it's down to $799,000. And here's another one in the same postcode, 4220. This is a 3-bedroom house on 405 square meters. And the price was on the 22nd of July, 2.2 million, negotiable. Now it's quoted at the 30th of July at $1.995 million. And here's another one. Again, Burley Heads, 4220. This is a 4-bedroom house on 627 square meters. It was listed 79 days ago. And on the 24th of May, it was on at $2.395 million. Now, on the 13th of July, at $2.195 million. And one more in the same postcode, 4220. This was a 4-bedroom house on 405 square meters. It was listed 162 days ago. And on the 1st of March, it was on at $2.475 million. Now on the 14th of July, it's on at $2.295 million. And let's look now at the data in this particular postcode. So first observation, mortgage stress and rental stress both exist, but it's just below the red threshold. There are some stressed investors as well, and there are some households in financial stress overall, lower than in some of the other postcodes we looked at. Now, the best case scenario is for a growth of 19% over the next 3 years if things go really well. The base case is a fall of about 5% over 3 years, and the worst case is a fall of 22.7% over 3 years. The gross investment return on average is 4.7%, and the net investment return is about 1.3%, so slightly higher than some of the other ones that we looked at. But nevertheless, there is enough evidence here to suggest that at the moment this particular area is one where prices are on the way down rather than on the way up. Now, of course, they did accelerate considerably over the last couple of years, but nevertheless, I think we're in correction territory now. Now let's go across to Western Australia, and we're going to look at postcodes and areas up in northwestern Australia. Now, these are very large postcodes, so in a way, trying to actually represent them at a granular level is quite difficult, and the overall population count is also quite low. So on a few of them, my model is not sufficiently accurate to show, but I can show you this example from postcode 6753 at Newman. It was listed 58 days ago on the 10th of June, and on the 15th of July, it was on at $380,000. Now it's $350,000. They're claiming a gross rental yield of 12.66%, which, well, that seems pretty excessive, but who knows? 4-bedroom house. Maybe it's to do with the mining sector specifically, because, of course, the miners are very well paid and often pay through the nose. Who knows? Now, here's another example, a different postcode, 6710, Onslow. This is a 2-bedroom house listed 130 days ago on the 30th of March. And on the 31st of March, it was on at $480,000. Now it's been reduced to $390,000 on the 16th of July 2022. And here's another one. This is actually at Roebourne, Western Australian, postcode 6718. This is a 4-bedroom house on a very large plot. It was listed 52 days ago on the 16th of June. And on the 17th of July, it was on for $940,000 to $1 million. Now it's on at $625,000 plus GST on the 21st of July 2022. So a considerable fall once again. And here's one other one, South Headland in Western Australia, 6722. Claims a gross rental yield of 13.04%. I have my doubts about that. But anyway, 5 bedrooms, a house, and on a very large plot. This was listed 124 days ago on the 5th of April 2022. On the 18th of May, it was on at $449,000. Now it's at $400,000 on the 19th of July. Now let's look at postcode 6722, South Headland again. And here, this one is a 4-bedroom house on 736 square meters. It was listed 46 days ago on the 22nd of June. On the 15th of July, it was on at $585,000. Now on the 18th of July, it's on for $550,000. And we can look at 6722 in our model. First observation is that mortgage stress is very high at 75%. Isn't much in the way of rental stress. So overall, the households in financial stress is relatively low, and the number of people with the mortgage is relatively low in that area. There's quite a lot of people, of course, in the rental sector, as you can see there, relative to those who actually are borrowing. Now, if we look at the trajectory of prices, the best case scenario is 15% over 3 years. The base case is a fall of 8.5%. The worst case is a fall of 27.1%. And on average in this area, the gross investment returns are reported around 3.8%, the net investment returns at 1.2%. So those very high figures in terms of gross investment returns probably need looking at, but also, of course, you need to look at net investment returns anyway to make any sensible judgment. Now here's another property in Port Hedland. This is in postcode 6721, a 3-bedroom house on 811 squares, listed 258 days ago on the 22nd of November 2021. On the 3rd of February, it was reduced to $545,000. On the 24th of March, it was down to $520,000, and it's still on the market. And here's another one in the same postcode, 6721. Again, 3 bedrooms and 811 square meters, a house listed 284 days ago on the 27th of October 2021. On the 28th of October last year, it was on at $645,000, now offers from $615,000 on the 6th of January 2022, and it's still on the market. And if we look at postcode 6721, The scenario is quite positive on the best case, up 25% over 3 years. The base case is just marginally positive, going negative for the next 2 years and then going slightly positive. The worst case is a fall of 16.7%. And the gross investment returns 3.9%, the net investment returns 0.7%. And I would highlight that the stress data is, well, showing there is no stress in this particular postcode. That's one reason why the scenario has more upside than in others. But then the counts are quite small, so it's possible that the survey isn't catching the full story here. Now we'll look at postcode 6714, Bulgara. And this is a 4-bedroom house on 734 squares. It was listed 6 days ago on the 13th of May 2022. And on the 17th of May, $617,000 was the asking price. Now it's $597,000 on the 15th of July 2022. And here's another one in postcode 6714, Nicole. And this is a 4-bedroomed house on 662 squares, listed on the 11th of July 2022. On the 14th of July, it was on at $849,000. Now it's on at $799,000. And that's on the 5th of August. And here is the details for this particular postcode, looking at our model. 44.4% of households in mortgage stress, so that's a problem. The rest of the numbers don't really stand out much. And as a result, the best case scenario is a rise over 3 years of 18%. The base case is a fall of 4.6% over 3 years. The worst case is a fall of 22.6% over 3 years. Gross investment returns about 3.8%. The net investment returns are 0.9%. So there you go, a full set of examples. Now, I must tell you, of course, that we've not done a lot of research on those individual properties. There may be particular issues, location, construction, maybe even some structural problems that actually explains why they're hanging around. But nevertheless, the net takeout, whether we look at those Queensland properties or Western Australian properties, is that property prices are sliding back. And it's quite interesting if you look at what we saw today from Christopher Joy. He made the point that prices are continuing to fall in the CoreLogic index, and he thinks more falls are ahead. He's still predicting a more than a 20% fall over the next few months. So we'll see how that plays out. But the takeout for me is quite simply this, that those who are still spruiking growth up in northwestern parts of Western Australia, or indeed in those areas of Queensland, are a bit behind the 8 ball. The market data that we're seeing is that falls are happening. In fact, falls are happening much more broadly across the country now, and even areas in Brisbane and more broadly in Queensland are beginning to slide. And even in Adelaide now, we're starting to see some adjustments down too. So I think the big party for property prices is over. And now the question is, how far down will they go? Now, if there are other areas you'd like us to research, just put them in the comments below. I don't promise to do it, but I do try and accumulate some data with Cookie Boy. And thanks to Cookie Boy for his research, by the way, to be able to actually put together a story to show that we need to continue to fight against the spruiks. Hence, it's anti-spruiking. Now, if you're buying your home in Sydney's contentious market, you don't need to stand alone. This is the time you need to have Edwin Almeida from Ribbon Property Consultants standing alongside you. Buying a property is both challenging and adversarial. The vendor has a professional on their side. Emotions run high, price discovery and price transparency are hard to find, and then there's the wasted time and financial investments that you make. Edwin understands your needs, so why not engage a licensed professional to stand alongside you? With RPC, you know you have experience, knowledge, and master negotiators looking after your best interests. So shoot Ribbon an email at info@ribbonproperty.com.au, and if you use the promo code DFAWTW/Martin, you can get a 10% discount offer. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.